Welcome back. APLD and the broader data center sector continue to stand out as some of the most actively traded and closely watched areas in the market right now, with APLD trading around the $39 level today and gaining more than 6% intraday, while APLX is up over 12%. And these are names we have been trading frequently due to their combination of strong momentum, expanding volume, and volatility that creates consistent opportunity for both short-term traders and swing traders. As over the last 25 days, APLD has rallied aggressively from roughly $23 per share to highs near $41, reflecting a powerful and sustained uptrend that has carried the stock directly back into a critical resistance zone near $40, a level that previously acted as all-time highs around October 2025. And from a technical perspective, when a stock makes such a strong move and then returns to test prior highs, that price area becomes a major decision point where the market determines whether continuation or consolidation will follow. This video and the information provided herein are for educational and informational purposes only and should not be considered financial advice. All investing involves risk, and you should always do your own research or consult with a licensed financial advisor before making any investment decisions. Past performance is not indicative of future results and are not responsible for any losses incurred based on the information shared in this video. Making the $40 level especially important because a decisive break above it followed by sustained acceptance could allow former resistance to flip into new support and provide the structural base for the next leg higher, particularly considering that the stock already completed a roughly 16% continuation move off the EMA over the last 5 days exactly as anticipated. Reinforcing the strength of the prevailing trend and demonstrating how disciplined technical analysis and trend-following strategies can align traders with high-probability market moves, while at the same time, fundamentals continue to support the broader narrative, as APLD has been posting rapid revenue growth and several recent income results have come in above expectations, alongside increasing anticipation around multiple potential multi-billion-dollar deals that could place the company's forward pipeline between $15 and $20 billion, which becomes especially notable when compared to the fact that the company's market capitalization had remained near $8 billion for an extended period of time, creating the asymmetric upside opportunity that originally attracted traders and longer-term investors when the stock was trading in the $20 to $25 range, and even earlier near $20 last September. And when zooming out further, the magnitude of the move becomes even more striking, as the stock has climbed from roughly $3 last year to nearly $40 today, representing exponential growth that naturally brings higher expectations, increased volatility, and more scrutiny from the market, meaning that as price advances, valuation, execution, and risk management become increasingly important considerations, because while a sustained move above $40 could allow the market to begin pricing in future growth expectations and potentially support a valuation scenario in the $20 to $25 billion range if revenue expansion, deal execution, and profitability trends remain intact, the possibility of near-term pullbacks or consolidations cannot be ignored, especially if broader market conditions weaken or risk appetite temporarily fades, in which case a retracement toward the prior support zone near $33 would be entirely normal and would represent roughly a 15% downside move even within an otherwise healthy long-term uptrend, which is why short-term traders operating in data center stocks must remain disciplined and cautious, and should always be skeptical of anyone claiming guaranteed upside, as corrections, pullbacks, and periods of consolidation are a natural and unavoidable part of market structure. And this emphasis on disciplined risk management is also reflected in our active handling of positions such as TSSI, where we bought the dip earlier this morning with approximately 800 shares, while clearly defining our stop level in advance and targeting around a $1,000 profit, with total risk limited to roughly 2% on the trade. And although the position is currently down approximately $140, That drawdown is fully acceptable within our predefined risk parameters because every trade is entered with a clear plan that includes the entry price, position size, stop loss, and maximum allowable loss, which forms the foundation of professional trading and long-term consistency. And these principles are demonstrated daily during our live trading sessions, where real-time decision-making, execution, and emotional discipline are emphasized. While for traders and investors who are looking to take a more structured and systematic approach to identifying opportunities in fast-growing sectors such as data centers, defense, and robotics, we also provide a free AI-powered profit plan designed to generate personalized consultation summaries based on individual goals, risk tolerance, and time horizon, helping market participants avoid emotional decision-making and develop a repeatable framework that can scale with experience. And as momentum across the data center industry continues to build, supported by large-scale infrastructure development for major industry players such as CoreWeave, which is up over 12% today and performing exceptionally well, the sector is likely to remain in focus as demand for artificial intelligence, cloud computing, and high-performance computing accelerates globally, making it increasingly important to balance bullish conviction with disciplined execution, realistic expectations, proper position sizing, and clearly defined risk, whether engaging in short-term trades or holding longer-term positions. And as market conditions evolve, we will continue to closely monitor APLD, APLX, TSSI, and the broader data center space, sharing insights and updates as new opportunities and risks emerge. And if you want to stay up to date with these market moves and see how we manage trades in real time, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss future updates.